Welcome to your weekly market update. Happy Thanksgiving week. I am so thankful and so grateful that you trusted us with your home purchase. This is our first time serving you or our 15th time serving you, we are super grateful for your trust. I always want to tell people how you impact me. Your trust, your business has allowed me to do just some things that I wasn't afforded in my childhood. I get to send my daughters to the school that I would like to. I get to give them a better education than I have. I got to take my wife on an amazing 40th birthday trip to Italy this year to celebrate her 40th. I got to take some time off to go be by my mom's side before she passed away. And that's because I have a great team in place. And your referrals, your mortgages, your trust pays their salary. So because of you, I got to do all those things. Thank you. That's all I can say. I hope you have an amazing Thanksgiving with your family. Now let's get to business. Interest rates are improving week over week. Since the government went back into session, we had rates go down on this chart equals up, and when things go up, down. So we saw once the government went back into session, interest rates actually went up. So as you can see, we correctly made these calls and locked in these clients at the best place. Now we're coming back into a better place. And the why is there is weak economic data out there. Listen, ADP came out just with a weekly report now that they do. And their weekly report says that there was 15,000 job losses just last week. Not job gains, job losses. So if we annualize or month, what would that be? Monthalize? I know that's not a word. I'm going to make it up. But if we take that out a month, you're looking at 45 to 50,000 job losses from the numbers that have got reported so far by ADP. Remember, we don't have the Bureau of Labor and Statistics for the month of November because there was a government shutdown. They're going to reproduce come January. So the ADP reports driving the markets. There is weak economic data out there. And the good news is the Fed is finally waking up to this. They're so interest rate obsessed and inflation obsessed, but they look at the wrong data. So they're starting to realize this in some of their comments. The uh, president of San Francisco, I'm not recalling her name, she even came out and she's one of hawkish means they want interest rates to be higher. Dovish means you want interest rates to be lower. She's very hawkish. And she even came out and says, we need to relook at this data and reconsider for December 10th. So you might see a cut. The probability, these probabilities change each and every day, but right now they're listing an 85% cut for December 10th, which would help interest rates because a lot of traders position themselves that there wouldn't be a cut. So that is good news. Stock market's still performing pretty well considering the weak economic data. I think the stock market is looking past some of these tariffs and looking past some of the job loss and job gain and softness. And listen, there's the haves and the have not in the stock market. So if you ever want to talk stocks, that's my passion. I love helping you with mortgages, but I love the stock market too. So what is appreciation doing? You might have heard that there's a lull in the housing market. But as we've noticed, that's starting to come to an end. And this just proves my point when I say, don't wait till the spring. All the buyers are going to be back in the spring. Interest rates are coming down. I've locked in some higher 5% 30-year fix this week. And when that information gets out there and clients start running their numbers, we're already seeing it. They get back involved. Listen, I have a 2.5% interest rate. I'm not going to move when rates are at 7.5. I probably will at 5. My wife's getting the itch for a new home. So when rates hit 5%, that's something that I feel I can afford. So Case Shiller came out. That's all homes. This is jumbo loan territory, conventional loan territory, tries to encompass the cash offers. It was up by 0.2 percent. So that went from 1.3 to 1.4 year over year. So not big appreciation, but it's not going backwards. FHFA is conventional loan territory, right? So these are loans now. The new conventional loan limit's 834,000, I believe it is. that also went up from 1.7 to 2.4. So that is good when it comes to the housing. That means the deals are going to stop drying up. The negotiations are going to start drying up. So it just supports the things that I've been saying all year long that this would be the opportunity. I am personally, I've already bought 4 properties this year during this season. I'm looking at a fifth. That will be my last one. I'm a big real estate investor. I never ever shop in the spring. I don't want to compete with all the spring buyers that bid up the prices. I want to go when inventory levels are good. Now, the difference between previous years in the fall and winter to now is inventory levels are great right now. So more inventory equal and with less demand equals lower prices, right? It's just simple economics. So put this to work for yourself. Don't be scared to be aggressive during the holidays. This is the time where everybody else pauses and you could get a great deal. You could get a lower price. You can negotiate some closing costs. But as you can see by those numbers, that window is coming to a close. So make it work for you like I have and many great real estate investors. I don't figure this stuff out on my own. I'm trained at a high level. I pay a lot of money for investment property coaching. I have all the data, all the analytics behind it. Last, certainly not least, if you ever want to have a conversation about taxation, I understand the SALT changes, that state and local taxes that was in that big, beautiful bill. I understand cost segregation. I understand bonus depreciation. I find a lot of CPAs I talk about don't even understand this. I've been on a 4-year journey since 2021. I paid more in taxes in 2021 than any other year I had ever made money before. So it was just this perfect score of great income, some big wins on some investments, some capital gains that hit me. You know, it was the perfect storm. But I vowed to never pay that much to the government again. Now it's all legal, it's all within the guidelines. And what I found, people get taxation wrong, in my opinion. Taxation, they're going to penalize you to not if you don't take risks, right? So go take risks with the money that you would pay the government anyways. That to me is what building businesses are, what flipping is, what developing homes are, and what buying investment homes are. You're gambling a lot of the money with money you would have paid the government for taxes. So I'd rather control my own destiny than have the government control it. And I'd rather have my money go to where I know I can create a return. And it feels really good when you're creating job opportunities. And it feels really good when you're making memories for a family with an Airbnb. And it feels really good when you renovate a home and make it look new and it aligns with your vision. Those things are all very powerful and rewarding. I would love to have conversations with you down the line if you ever want to chat about it. It's what I've been passionate about and what I've worked really hard on over the last 10 years. So thank you again for everything you do for us. I am grateful to have you as a client, as a friend. Anybody that watches these videos, have a tremendous day. Reflect. My family does vision boards during Thanksgiving. We set all and finalize all our goals. We plan all of our trips. It gets too busy during Christmas. Now is the time over the next 3 days that we'll do that. It's just changed my kids' lives, guys, to help them create their vision for their lives. And I lead by example, showing them how I do it. So if I can ever help you with that as well, please let me know. And thank you for all you do for us.